Okay, the session is recording now. Awesome. Well, hi everyone. Thank you all for joining. I know we only have one person on the call today, but definitely I know everyone will be watching the recording, so we're super excited. My name is Sarah. I'm the community manager here at Kiro Money. And just a little bit of background about Kiro Money is that it's an AI financial literacy platform, basically focusing on Gen Z and young adults. We work with college students, nonprofits, and now, of course, foster youth. So one of my passions is to bring financial education to the foster youth and foster alumni community. I have lived experience myself, and this journey has just been amazing. And I'm just so excited to share all of the knowledge I've learned and gained from being the community manager. And so, yeah, let's just get right into it. Let's see. Okay, awesome. So how did Kiro start? Well, on the left there, you can see Alicia, our wonderful founder. I met her my senior year at Smith College, and she actually is from New Orleans, or NOLA if you want to call it. She attended the University of Pennsylvania. She was a part of the Girls Who Invest program, which I didn't even know existed. And it's a program for women to get involved in investing when they're first and second year of college. And then she actually, from that program, she actually got a private equity internship. So then she actually got to move to New York and started working at a private equity firm. And then that kind of turned into more of her role at Vanguard, where it's the leading asset manager. And then she also got to go get scholarships and go get a full ride to MBA, London Business School, and get her MBA. And that's kind of where Kiro all started. So she kind of had this business venture, and she kind of started in her MBA, and it's just grown a lot from there. And she's been an amazing mentor to me. And she actually started like doing financial education, financial coaching sessions, her in her MBA, and it kind of just sprouted from there. And so that's kind of a little bit about the background of Kiro and how it started. So a bit about me is that I'm originally from Tucson, Arizona, and I actually was a part of this high school college prep program called STEP. And they told me a lot about private liberal arts colleges. And so I actually got accepted to Smith College, which is an all-women's college in Northampton, Massachusetts. And I knew from the very start that I wanted to study neuroscience. I had this passion of science in me, and it was always because I love learning and I'm a critical thinker. So it's like, okay, science, that makes sense. I always loved science. I always wanted to study generational trauma because of my lived experience. I wanted to understand, the genetic component that is, involved in the cycle of poverty and our lived experience. And so, I took a lot of psychology classes, neuroscience classes, a lot about nature versus nurture, environment. And then my senior year, I actually got to be a part of this first initiative called Becoming Money Mentors. And it was a new program at Smith, and it was based all on financial literacy. And so kind of from that, I was like, oh, wow, like there's so much to learn in the financial education space. And where I come from, my family doesn't have retirement accounts. We don't even know what investing was. So I kind of, started to think about this. And I was like, okay, so we have the generational trauma part, the neuroscience part, and we also have the systems part. So it made me think, okay, what can I do about this? So, education was the big, component of this. So when I graduated Smith, I didn't have any jobs lined up. I worked for Albertsons, the grocery store, Harbor Freight, being a cashier. I was also working for Sunshine Residential Homes, which is a group home, and I was working with foster youth. And, as a registered behavioral health technician, trying to get into financial education, and it just, wasn't aligning. So, I met with Alicia a few times, and, she was like, you know what, Sarah, you should be on the team. And she got me on the team. And this was about maybe like 8 to 10 months ago. And I've just been really, going out in the community and sharing about financial education. So that's a little bit of background about me. So I just want to take this time to like pause and just reflect that thank you all for showing up and being here. And just even if you're watching the recording, it's a big step. I know for me, a lot of this took a lot of time, and I just want to acknowledge everyone's lived experience. I know we all have a similar, connection because we all were in the foster care system, but everyone's experience is very different. And so a passion of mine is just to be trauma informed and trauma led. um, Ask any questions throughout, or if you have any questions, definitely reach out to me. This took me a very, very long time to understand, and it did not come overnight. Um, I do believe that anyone can learn, and with the community and with education, that's how, we get started on this. And I've really gotten involved in advocacy work, and advocacy work is where you really do see the change. And that's kind of where I'm at today. So please feel free to stop me if you have any questions throughout. But I just want to say thank you all for showing up and for just being here and listening. I'm telling you, just showing up and having the knowledge just go in your brain, it will definitely do something later in life. That's what happened with me. So bear with me and stick with me. Okay. So if you want to come off mute, you can, but I just wanted to ask the question is, why do we invest? Just curious what your thought is, Ivory, if you have a thought.
Yeah, well, I am currently investing because I'm sorry, I'm trying to make sure that my dog doesn't attack my baby. It's being really crazy right now. I invest in my retirement plan, and I have a more conservative plan. Like I've picked stocks and indexes that are like pretty predictable and have a consistent trajectory. So that's why I do it. I would like to do it for more passive income, but I'm just like uncertain and unsure as to how to get there, if that makes sense. And I've also been prioritizing any extra money that I have right now with like paying off credit card debt versus investing. So I'm trying to figure out how to balance. And I just bought a house like a year and a half ago.
Okay. Congratulations. That's a big.
Thank you. There's all that going on though. So that's where I'm at.
Yes, that's very true. Yeah. I would say a lot of people do invest for the passive income part. I've heard that before. And definitely you brought up the house. A lot of people, invest for long-term goals, short-term goals, different ways, so it is really important because it's just a way of, living and just being able to afford, certain things in life. And it's very important to understand it because there's a lot of different nuances. And basically, it's just all about your goals too. Everyone's goals are different, about what they want in life. And so it's just really important to understand how to get to those goals and also understand which accounts can get to your goals. So today we'll be talking about, all of the fund types like Roth IRA, 401k, things like that, custodial accounts, 529 plans, all of those that, it definitely took me a while to understand and learn, but it's also about the language. And if you really think about what is your goal, like why are you opening this account, it really helps take back that hesitation or anxiety around it. So definitely investing, take care of our family, take care of things, passive income, that is all what I've heard too before. So what is investing? So basically, I really like analogies and pictures. So investing, as we all know, it's just planting a seed. It's just planting a seed and watching it grow over time. Definitely time is the most important, I would say, when you're talking about investing. And so this is why we try at Kiro to, talk to college students or younger people, because definitely when that seed plants, it takes a lot of time for a tree to grow. So that's all investing is just, planting something and hopefully it grows. So this is a big question to ask yourself about when to start investing. So in the previous workshop, we had a part 1, we talked about emergency funds and high yield savings accounts. And so basically, high yield savings accounts are high interest bearing accounts. And they're mainly like digital banks and things like that, but also like Capital One offers them, and they just offer you a higher interest rate than your regular regular savings account at Bank of America. So if you have any questions, we can go over that a bit later, but definitely just make sure that you have an emergency fund of at least 500 to 1,000 or 3 to 6 months of expenses. Make sure you can pay your bills comfortably each month. And also just check to make sure you're okay leaving this money alone for a few years. I would definitely say, with my lived experience and with everything going on right now, definitely a lot of people are uncertain right now. And so we want to acknowledge that feeling, and especially for lived experience individuals. I know I've had that experience where I had my savings all built up, but then my car broke down. And so I had to use all of that savings for that because, of course, I don't have parents. I don't really have anybody there. It's just me. So, it's really important to have that foundation built for yourself so you don't get yourself into more debt. And so it's really important to make sure you ask yourself, okay, if my car broke down or if something happened, do I have this emergency fund so you don't have to get into debt? And that's where the high yield savings account can go into as well. And that's not taking any risk at all. But of course, when we start talking about investing, you are taking risk. So it's really important that you ask yourself all three of these questions. And if yes to all of them, you're about ready to invest. We do want to make it clear, though, that, just starting is really important too, but also acknowledging that investing does take risk. So I just wanted to go over some of these accounts. So these are definitely the main accounts. So you have your brokerage account, your Roth IRA, traditional IRA, 401k, 529, and custodial. I know when I first learned this about 2 to 3 years ago, maybe now, my senior year of college, I didn't understand this at all. Investing was not something at all I thought of. I thought investing was something only for wealthy people, and you had to have $1,000 to start even. That's not true, though. You can start with very little. It's just important your strategy and what are your goals. So, of course, for a brokerage account, that's mainly focused on medium to long-term investing. So wealth building for bigger purchases later, like we talked about, like a house, that would definitely be for a brokerage account. And what is so great about this account is that you can withdraw anytime. You just may owe taxes on your gains or your profits you made from your investments. And it's just great for starting your $500 investment, easy to use, very flexible. So very, very easy to use to get started on your investing journey. The next one is Roth IRA. So this is definitely a retirement savings account. This is meant for retirement. And I actually definitely recommend this one to younger adults because it's after tax. It grows tax-free. So, for someone like me, I just opened mine in October. I'm in a lower tax bracket right now. So that will help me advantageously later in life because I'll be paying lower taxes at the moment. And then the flexibility of this one is medium because you can withdraw your contributions anytime, but not before age 59 and a half. So it's really important to know that because there are penalties and consequences for pulling this before. And like I said, it's great for young investors, tax-free growth for future you, because, I hope, right now in my career, I'll be making more in 10, 20, 30 years than right now. So it makes sense for me to open up a Roth IRA right now. So that would align with my goals and my timeline. The other one is a traditional IRA. That one is also retirement savings. It's pre-tax, pay taxes later. That one is very low flexibility. It's hard to access before 59 and a half without penalties. And it's best for long-term retirement planning and lower taxes now. And I believe that there's a minimum contribution limit to that. So it's once you start making over a certain amount. So it's really important to pay attention between Roth and traditional IRAs. They are different because of the contribution limit and the salary you make. I can't remember what off the top of my head that amount is, but definitely look into that before, opening anything. The next one is a 401k, and that is employment retirement plan with paycheck contributions. Definitely, this one is through your employer, and it's very low. It's locked until retirement, and penalties for early withdrawal. There are highly consequences. And recently in the news, I know I've seen a lot of Americans have been actually accessing their 401k and cashing it in just because, the economy and uncertain times, and that's what we want to try to avoid. So it's just really important, when you open up these accounts, what they're used for, because you want to make sure that you can access your cash if you need it in an emergency. And that's why there are emergency savings funds we talked about, for that reason. You don't really want to touch your 401k unless it's a dire emergency. So it's just really important for people to understand that. And yeah, it's just ideal for long-term savings, often includes free employer match, all of that. Any questions so far before I continue?
I actually do have questions because
Okay.
I just finalized the adoption for my son. And so now I have all the paperwork that I need to be able to like get him a bank account. And I know, and forgive me if this is not the right time, but I've heard that Roth IRAs might be something. And then also, is it the 529 plan in Pennsylvania specifically was something? I'm guessing those are the two things that I should look into for him.
For the So 529 plans, so definitely those two. 529 plans are definitely educational specific. I do think that there was a policy that ruled out, if when your child turns 18, if they decide not to go to college, they can turn that into a Roth IRA. So that was a new policy. But also 529 plans are very state specific, and they are for education or training purposes. So that 529 plan has to be used on educational things such as tuition, books, all of that. But I do know that there was a policy recently within the last few years that if the child decides not to go to college, they can roll that into a Roth IRA. And I believe that was made because a lot of parents were saving for their children's education and that money wasn't going to use. So they had saved up like 30K plus, but that child decided not to go to college. And so, I think that policy was in place for that. And then there's another account too, custodial accounts, and it's investing for minors. I think that might be more along the lines of what you could look for. There's a lot more things you can do for it rather than the 529 plan. It can help with their retirement, set them up for retirement. And it can be used anytime for the child's benefit as well. And it's great for under 18s to start investing early and learn ownership. I see he's a little bit of a little right now. So I would definitely look into custodial accounts. But yeah, 529 plans are like the hidden gems too, is what we say, kind of, because the money you put in there, you don't pay taxes on at all. So that's why they're very hidden gems and really important to kind of understand that part. Unlike the other accounts we talked about too. Does that kind of help your question at all?
That does help. And then I had another question. I was reading that you can put your children on, like, if you own a business, like you can put them on your payroll when they're like 6 or 7. Is that correct? And start kind of like building their credit or contributing to their credit history and things. Is that a thing?
I can look into that. I haven't heard that, but I would be very interested to look into that. But I'll get back to you on that because I'm not sure.
It's
But
something along the lines of like building generational wealth and making sure that your
oh,
children
okay.
sustainable like financial well-being. And I think if you're a business owner, and it might depend on the state, but generally your child is like around 6 or 7 years old, you can add them to your payroll. And that can start building like their line of credit and kind of like start distinguishing their portfolio or something. And then also putting them as what is it, as a co-signer or something on like credit cards and things that have, minimal balances and such. So I'm like keeping these all in my mind.
Oh yes, definitely. Definitely. I'll definitely look into that for you and get back to you because I'm not sure about that and I want to make sure I give you the correct information. But that's interesting. That's interesting.
Yeah, thank you.
Of course. Okay, let me just go on to the next one. So I just kind of wanted to go through each account slowly because I know for me, like it takes me a while to understand and retain it. So I know we went over each account a little bit, but basically, the brokerage account is for mid to long-term goals. A house is like the big one. A lot of people use this one for, and just to make sure everyone knows, you only pay taxes on your profits when you sell. So that's really important too, to understand that. And there's no contribution or withdrawal limit. So that's why it's definitely the one we kind of lean towards for people starting, investing, since there's no contribution or withdrawal limit. That's a big pro for that one. Let me see. Okay. And then the Roth IRA, exactly, like this one is meant for retirement. Like this is not for, investing in house or, a car, anything like that. It's for retirement. So it's really important. Each account serves each specific goal in life, right? That's kind of how I look at it. And it makes more sense because then if I have more of an understanding of what the account can do for me, then I know which one I'm opening and why I'm opening it. And so this is just a retirement account where you invest on money you already paid taxes on. So the growth and withdrawals are 100% tax-free later in life. And it is important to know that withdrawing your earnings, the profit before age 59 and a half, usually triggers like the 10% IRS penalty. And that's why it's so important to have accounts like high yield savings accounts, emergency funds, other accounts to buffer for an emergency, because you don't want to take that penalty on, your own retirement account. So it's just really important to understand that. Okay. Let's see. And then the 529 plan is a tax advantage savings plan designed to help pay for future education costs. And this one is definitely state specific. I know Arizona is probably different than, you said you were in Pennsylvania, right? Yeah, so it's probably definitely different. So it's definitely important to do some research on your states. But it is important, like if you're thinking about education or, certain classes or things like that, it is really important to have that. And, I didn't really know about this one until I went to college. My friends were like, oh yeah, my mom had a 529 plan for me. That's why I got to go to this school. And I was like, 529 plan? I don't know what that is. And I didn't even know what this was, or my mom or someone could have opened this for me for education. And so just coming back to that lived experience, just being aware of it, that it's in the wheelhouse, is just really important because, I went to college, I had scholarships and things like that, but definitely like 529 plan, I think would have really helped me and my mom. So yeah, just a little bit about that. Okay. And then there are also custodial accounts. So it's a savings or investment account opened by an adult, the custodian, on behalf of a minor. And there's two. One that I know specifically is a Uniforms Transfer to Minors Act, and that is more flexible for children, for their retirement account or things like that. And so there's definitely a lot more leeway, but it's, between the custodian and the child up until a certain age. So it just really depends on, 529 plans, the specific rules and things like that versus a custodial account, because there are different ways to go about it. They essentially serve, like a minor and a child, but the ways that it benefits the two children and the ways that you can utilize that money are two different, ways. So it's just important to look at that as well. And so I just want to take a pause. That was like kind of all of the accounts, just like an overview. And so I just wanted to check in and see how we were doing, if we had any more questions that came up at all.
We're doing good. I mean, I have a million questions, so we can keep moving on.
Okay. We'll get there. So this is kind of where I get into the part of like how you invest and what is investing, like what little vehicles would you use. So I know we all have heard of stocks and bonds. I know I didn't understand this for a very long time, so be patient with yourself. Definitely with the stock, it's just essentially like a share in equity. You're buying a tiny piece of the company just to have ownership of it. And then a bond is essentially a formalized IOU bond. And so you're actually lending money to a company or a government. So it's just important to know the differences. Stocks and bonds are a lot in investing terms and have been in the history of investing. But there's also these really cool, other ways of investing that are new that I'll get into. But, it's just really interesting. Why not just buy one stock or bond? there's a lot of concentrated risk if you buy one stock, right? We hear all the time, like a stock tanks, bonds with the government, are they going to pay me back? Things like that. Companies can fail, examples like Blockbuster and Express. So that's why at Curo, we kind of talk more about mutual funds and ETFs because they spread across many companies. I want to check in, Ivory. Have you heard of mutual funds or ETFs at all before?
I'm pretty sure I've heard of mutual funds. ETFs, I'm trying to, can you remind me what the acronyms or what that stands for?
Exchange traded funds. Have you heard of that?
If I have, I don't recall what it means. So
Okay. I'll give you a little refresher. So basically, mutual funds and ETFs are just, a basket of fruit, diversified, right? With the stock, if you have an Apple stock, little Apple, and that one stock goes bad, well, that's all of your money, right? It's a lot of risk in one. But if that Apple goes bad in a diversified portfolio, you also have different companies around, like the pear, the pineapple, the orange, to kind of, hold you up. So it's definitely a lot less of risk. And so that's definitely why we kind of, tell younger adults, who are a little bit risk averse, or also, lived experience, risk is really important to us when, funds are tight and things like that. So just like a basket of fruit. Oh, I skipped over that. Okay. And so mutual funds and ETFs, they both track the S&P 500. And so definitely mutual funds are priced and traded once per day, and exchange traded funds are traded throughout the day on exchange. And so basically the cost for a mutual fund is higher and the ETFs are lower. And the minimum investment of mutual funds is about 500 to 3,000. Whereas ETFs, the cost of one share could even be $1. And so why we really stress ETFs is because access, right? People who don't have a lot of money, they don't want minimum investments. They want something easily accessible. Hi, Catherine. Thanks for joining us. But yeah, so it's just basically making investing accessible for people. And also the tax efficiency. It's worse with the mutual funds and better for tax efficiency for ETFs. Any questions on this before I go to the next slide?
So is there a benefit over like one or for the other? I know that like the ETF would be more accessible. Also, is that synonymous with like a money market account, or am I thinking about something different?
I'll get back to you on that. I'm not sure exactly, but I do think it's a little bit different. But let me get back to you on that. The ETFs. So let me think before I. So right. So expense ratios, that's going to become apparent in a little bit later, and I can show you on the Curo platform. So expense ratios are the expenses you use for managing your portfolio. So a lot of times what you'll see is the expense ratios are higher with mutual funds rather than ETFs. So you're actually paying more for the same thing. And an example would be like VOO and SPY. So VOO is the Vanguard ETF, and SPY is the state traded fund thing. They basically track the same. They have the same holdings, but the expense ratios are different. So you're paying more for mutual funds rather than ETFs. Does that kind of help answer your question?
Yeah, that adds clarity for sure.
Okay. Any questions, Catherine, at all? I know you joined a little bit later.
Yeah, I just joined, so I'm just trying to look at your chart here.
That's okay.
So, but thank you.
Of course. Just chime in whenever you want. It's just us three. So I definitely wanted to get into this part. So, once you open up your account and everything, a lot of people, I've even thought this too, and a lot of students we work with think this as well. But when you open your account and you're going to transfer that money from your checking or savings account into that settlement fund, that is where the money market fund, that is where it's just sitting. The money is just sitting. You're not actually investing yet. You're not investing yet. And this is where I had that misconception, and a lot of other people do too. And so that's definitely where the education part comes from. So when you transfer your money from your checking or savings into your settlement fund, that's kind of what it's called, the money market fund. People think that's investing, but that is not investing. There's two parts to investing: transfer and transact. So you transfer the money in from your savings account into that settlement fund, and it's just sitting there. It earns a little bit of interest. I can't remember exactly the percentage, but it's just sitting there earning a little bit of interest. But when you execute the trade, that's the transact part. And that's where you can say, I actually invested. The transfer and transact rule. A lot of people just transfer the money and they log out of their account and they think they're investing in things, but they're really not. This is something that I learned as well. And so it's just really important that you know two steps to investing: transfer and transact. So I just wanted to stop right there and make sure that makes sense to everybody. And if there are any questions about that. No questions? Okay. So I definitely wanted to, demo Kiro's product just to show you kind of what it can do. And why I want to demo it a little bit is because, I didn't have access to financial education that is also vetted, a lot of lived experience. We can't afford CPAs or anything like that. And so, I thought it was really cool that Kiro had this AI chatbot that's been trusted, vetted. There's a lot of, data protection, privacy, a lot of things that go into it that make sure it's giving out right information. And that's what I really liked. And so when I didn't really understand what's the difference between a Roth IRA or a regular brokerage account, because I was trying to figure out which one should I open, I was getting some ideas from the product. And then, we do have programming also to help reinforce learning, because for me, it takes me a while to understand the concept. I have to keep going back to it. And that's all what Kiro's about. We're always about education and however long it takes. And so I just kind of want to demo the product, if that's okay with you all. Okay, let me stop sharing real quick. Let me go to it real quick. Okay, can everyone see my screen?
Yes.
Okay, awesome. So this is kind of, our new layout. We just updated the website. So signups are not required, and it is completely free if you do sign up or if you use this product. For the end user, it is free. So, but for the first 5 times, if you want to ask it a few questions just to get to know it, you can for free. So we can kind of, explain what a expense ratio is, right? That's kind of what we were talking about between mutual funds and ETFs in a way. So it kind of pulls all the data. Everything is vetted. Financial coaches have gone through it. So it basically is that management fee you pay down on an ETF or mutual fund. And so it's just important to really understand that, because there could be hidden fees. And this goes back to mutual funds, right? So we can say, what is the difference between VOO and SPY, which are both two ETFs just for different platforms. And then basically it'll graph the live data, and it'll kind of tell you, okay, both track the S&P 500, but VOO is cheaper for long-term holding, while SPY is more popular for active day trading. That's really important to understand, because day trading is very different than investing long-term. And so you can kind of see all of the different areas, right? You can see the allocation, the holdings. So look at this. So we have NVIDIA, Apple, Microsoft, Amazon, Google, the top 10 right here, right? And then we go over here, we can also compare, right? Go to holdings, the same exact 10, right? NVIDIA, Apple, Microsoft, Amazon, Google, same exact 10. But if you go here, you can kind of see the expense ratio. The expense ratio for VOO, for Vanguard's ETF, is 0.03%. compared to SPY, which is 0.09%. So you're actually paying more if you're investing with SPY than VOO, but it's for the exact same holdings. So it's just really important to kind of, understand that when you start investing and what you're investing in to understand. Does that all make sense?
Yes.
Okay. Any questions? Do you want me to ask the chat bot any questions? Like, I don't know if you all know high yield savings accounts or just any question you all have, we can ask the chat bot and see what it gives us. Ivory, did you want to go to your question? I think you were talking about custodial accounts over 529 plans, possibly?
Yeah, let's ask one of those. Sorry, I was trying to wipe both off of my
That's okay.
toddler.
That's okay. Let me see what. And feel free to ask any questions too about the product or anything. Very interactive. You can ask me anything.
And do you have to have like an active investment account with you all to be able to access this, or is
No.
it like or something?
No, this is all educational. Anyone can go on our website, joinkiro.com. It's open for anyone, as long as everything's vetted. We try to have like 18 plus just because it's financial education. But a lot of high school students, college students, families use this. Grad students use this. And it's really important because no one teaches us personal finance, right? Even people who are studying economics, who are in college or who are in finance, they sometimes don't know personal finance as well. So it is very different, especially even if you do come from that background. And so that's why I kind of wanted to lead with the lived experience, because I know how hard and scary it is to get into this. I remember when I was at Smith, my sophomore year, I really wanted to get involved in the investment club, but I just felt like it wasn't for me. And then that program at Smith happened my senior year, and it was very much comfortable environment, very much low stakes. Anyone could ask a question, and that's what we're about at Kiro, just having the community and also like utilizing AI and helping access, right? Because a lot of people can't afford CPAs or don't have the generational wealth passed down. So that's kind of why we started Kiro and things. Studio account. Okay. And so here, definitely this could give you more information about the two different accounts just to help you with your decision. So definitely 529s are tax-free for education and stay in your control. Custodial accounts, that UTMA or the UGMA, are flexible for any use but belong to the child at adulthood. So that's definitely important to understand that control and taxes are the two differences. And so you can kind of see the differences between the two. And so with the custodial accounts, it's important to understand that the child takes control at 18 or 21. So that's when I was kind of saying it's really important to understand, what is this account for and what are the, rules or policies of this, because with the 529 plan, the parent keeps control forever. So that's definitely a difference in whatever you're comfortable with. It's important to know that before you open one or the other. And then also, definitely like this one must be used for education. Like I was saying, there's not a lot of flexibility, but this one can be used for anything, a car or a house. So it's just really important to understand what are your goals and what makes sense for you and your family. But yeah, and then it kind of just goes into you don't pay taxes on the investment growth as long as it's used for qualified education expenses, the 529. And then also that policy I talked about a few years ago in 2024, you can roll over up to 35K of unused funds into a Roth IRA for the beneficiary. So that was definitely a policy change. So it is important to look out for those as well, because before that was not allowed before. And then also, why choose a custodial account? There's not a lot of spending restrictions, all of that. And then, in 2026, new policy again, the first 1350 of investment income tax-free, all of that. So it's just really important to know the differences and what would work for you. So hopefully that helped a little bit, Ivory. Any other questions about the product or anything else before I kind of move on to talk about our programming at all? Okay. Okay, awesome. So I'll go back to the slide 1 second. Hopefully everything is making sense and everyone's on a good roll right now. Okay, let me go back. Okay. Okay. So definitely after the demo, I just want to make sure that some mistakes to avoid, right? So waiting until you make more money, time is always on our side. Even if you have $1 or $5, I've definitely gotten more into automating things. That's been helping me a lot with kind of taking away the paralysis analysis of it all. I think sometimes when you actually do it, you're like really scared and hesitant. And so if you just understand, it's really important to understand where you are with your finances, where you are with your cash flow. So you can see, oh, okay, maybe I can put $10 away this month, or oh, I got a bonus at work. Oh, okay, I can put like maybe $50 this month. So it's just really important to understand that waiting until you make more money is not the greatest part, because time in the market over timing the market will always better suit you. And it's definitely tracked that as well in the data. And yeah, try not to time the market. It doesn't work out. The data has shown us that timing the market just doesn't work out. And then also panic selling when markets drop, that also doesn't work out too, right? We're here for long-term investing, goals of, what do you want in life? Like that is what investing is for. And so at Curo, we really try to educate young adults on that part. We don't really talk about day trading. We don't talk about a lot of that stuff. It's more long-term investing. And so, yeah, time is your best friend when it comes to investing. Start today, just $1. ETFs makes them so easy. And there's also really cool stuff like ETF, like with Bitcoin, like so you can get some exposure into like crypto and Bitcoin if you wanted. That's an option too. That's kind of new. So definitely there are ways that investing has become more accessible and more, just in general in the general population. So here's like a quick Google form if you all wouldn't mind just filling it out. It should take like 2 minutes. But yes, just let me know when y'all are done and I can kind of go over our programming. So thank you. And unmute if you have any questions at all.
I don't think I was here long enough to really be able to fill out a form. I've only been here about 5 minutes, so
That's okay.
yeah.
How do you feel about the session so far? Are you liking it at all?
But yeah, I mean, I think you're doing a good job.
Thank you.
But I wasn't able to do the ETF and all the other to hear all of that. So I've only just, and 529 doesn't apply to me because I don't have any younger kids. But you're doing a good job hosting and explaining things.
Thank you. Do you have any specific questions that I could help with or put in the chat bot, or what were you kind of just, looking for? Anything, you kind of want to know about at all?
Well, I don't know if you know, because I'm in a different position as a lot of you, because we're getting ready to retire
Mm-hmm.
in January. So we're like on the other
Mm-hmm.
end of it, and I've always we do have somebody, helping us with our stuff. We started late, and I would say if my advice is the minute you can start saving some money, start saving some money. You're
Right.
gonna need it,
Right.
because this day and age, I mean, it takes a lot more than it did, many years ago, when you only needed like $1 million. Now you need, shoot, 2, 3, $4 million to retire.
Inflation.
You have
Yeah.
no idea what when you check into retirement, and all you're going to have to pay for Medicare. It's scary. It is scary. So definitely make sure that you start saving. The sooner the better. So
Yeah.
that's my best advice. I mean, we started late. We were, I don't know where we're going to be, but we're kind of trying to do some catch up right now. So, but I don't understand this Bitcoin stuff.
Mhm.
And my son has done it and he's done quite well with it, but I don't understand it. I don't, do you guys do the Bitcoin? I don't understand that at all. Do you understand it?
So one of our programming is, and I can kind of get into that a little bit, but one of our programming is the Hero 500 Club. So it's the first ever accelerated investing program. We started the first cohort last October, and it was open to just only women. The second cohort took place in February, and that was open to college students. And then this summer, we're opening it up in July to anyone above 18. They didn't have to go to college. They could be in college right now, or they could be post-grad college. And we have speakers come from JP Morgan, Vanguard, to talk about how do you actually get started in investing, where you actually are a participant, but you walk away with your own brokerage account that you opened, and we show you the steps. So we actually hold your hand, which is great. And we actually have a speaker who talks about crypto and Bitcoin. He's kind of our expert on that. And just basically, like, the whole concept is it's hard to conceptualize, but basically not one person owns it and it's decentralized. So definitely there's not like control over it, because there's some history about like the dollar and things like that when Nixon came about. But it's through computers and you mine it. So it's all like through computers, and the way the mining works is it's just a bunch of codes and things like that, and people actually like mine it, and then they actually have it, but it's like on a drive. Like, people sometimes put it on a drive, and so it's just, the concept of it is hard. But a lot of places, it's a new concept and things like that, but it's really cool. I know Judge Judy kind of talked about it a little bit. I watch a lot of Judge Judy. She doesn't really understand it, but it's just like to get involved into something different. But it's been mining really fast lately, so it will be gone, I think, like, I'm not sure exactly the date, but it's just basically like mining it from a computer. And yeah, it's just basically the concept of it, if that helps at all. Let me see if I can ask the chat bot if it has a better explanation, because it is hard to explain, I would say, especially for different generations too. Like, I completely like understand that. Hold on one second. Tab. Can you see my screen at all?
I can see the question, can you explain cryptocurrency? Yeah.
Oh, let me sign into my account real quick.
Okay.
Did that help at all? Maybe at all? Just the conceptualizing
Yeah,
that, like, you said
yeah,
a
because
little
I
bit?
do kind of understand it a little bit from
Yeah.
my son. My son, he made enough money to buy a house, and I don't even know how you buy houses with crypto. And
Yeah,
I don't, I just don't understand all of this stuff. I mean, he's just, uh,
definitely.
I don't understand it. He's you guys' age, so
Yeah,
I mean, he's got his finger on the pulse, but he doesn't live near us, right now. So it's like I can't just call him up and just talk to him about it all the time. I
right,
want to understand it better, but I just don't
right.
understand it.
Exactly. Yeah. And definitely it's just all digital currency. So definitely that's probably why too it's a different, age. It's not issued by a government or central bank. It's not owned by one person. A lot of people different own it.
Yeah.
It was made through an anonymous name. You can't hold physical Bitcoin. That's why I think it's hard to conceptualize. It lives on the
Yeah.
internet. And this is the term that I was trying to remember, but blockchain tech is how
Blockchain.
the actual Bitcoin is mined. And it's just like complex coding and things like that.
Do
You
you
know,
do the coding yourself? In order to mine it? Do you mine it? Does somebody else mine it? Can you go with the like a Kiro to do the mining for you? I mean, I guess I don't understand how the mining works and
yeah,
who does
let
the
me,
mining.
how does the line work? Yeah, I think it's just a bunch of like codes and math problems, I believe. And just when someone solves it, it kind of opens it up. Let me see if this will explain it. Yeah, it just involves computers solving complex problems, things like that. So miners use high-powered hardware to solve incredibly difficult math problems. The first miner to solve the puzzle gets to add to the next block of transactions. In exchange for their work and electricity use, the winner is rewarded with newly minted crypto. So it's very
Yeah.
hard to conceptualize, but energy and speed is really important. So that's a little bit about that, if that helped at all.
That's very interesting.
Very.
So, do you do that, or do you
So,
hire somebody to do that for you?
so we're just an educational platform. We don't do any
Okay.
like financial advice
Okay.
or actually complex, problems like that. We just explain
Okay.
certain concepts and things like that.
Okay.
That's kind of,
Okay.
yeah, where we are.
Well, that's good to know. Thank you for the information. I appreciate it.
Of course. Okay, let me go back to the slides. I know we're almost out of time, so I want to respect everyone's time. So let me just go real quick. Definitely, let me. I would definitely say for the Curo 500 Club, I can send out all of that information too. I just launched the application and I'm so excited for it. Definitely going to be working hard on that. Um, Let me see if this will work. Okay. Yes. Okay. Yes. This is definitely something that is really cool. And now it's open to anyone 18 plus. They could be a current college student, post-grad college student, in trade school, or just working, and they just kind of want more education resources around investing. We have speakers who talk about stocks, bonds, and these are people who are experts who actually work out in the field doing this day by day. So there are definitely a lot of networking opportunities and a lot of ways to understand this, as I know it can be really complex. So that was just a plug for that. You can join our WhatsApp community. We have a WhatsApp community, and it's mainly full of women who just share their financial journeys, any wins they have, podcasts. The founder, Alicia, she kind of writes her newsletter every Monday to share it, and she has really cool pop culture moments and news where she just, tells you up to dates about AI, tech, everything women. So it's really, really cool WhatsApp community that I'm also a part of too. And then you all have free access to Kiro. The first 5 times it won't prompt you to sign up, but it's completely free to sign up and you can ask it any question. It's been vetted by financial advisors, financial coaches. We're backed by the NSF, so it's all safe and all vetted. It's so much better than, a lot of people are going on ChatGPT for their financial education, but a lot of that data is trained on Reddit. And Reddit, of course, as we know, can be sometimes, biased and more leaning towards one side or the other. So it's just really important to have this tool there. And then check out our YouTube page. Alicia had her expert session all on portfolio construction around ETFs during the AI, rush and all of that. So she also has a quick 7-minute video on there on high yield savings accounts. So if you want a little bit more education and resources, definitely check that out. And then if you're still not sure about, what is a high yield savings account, or I don't really trust that, you can always lean on the community, go on WhatsApp. Hey, I watched this video, but I still don't understand. Can someone help me? The community is more than welcome to help you. That's what we're here for. And then also expert sessions. We just had one this past Friday, and it was mainly on side hustles and how to streamline everything. We have all of our expert sessions on Luma. I think this is where you signed up for this one today. We're trying to host those every month or every other month. So definitely look into those, and hopefully we'll be posting on our YouTube soon the recording for this one. And I already went over the 500 Club. And then there's all of our links. We have TikTok, Instagram. There's my email, my work email, sarah@joinkiro.com, and my own LinkedIn. So that's all for today. And I'm You know, I know we're a few minutes over, but I just want to say thank you all for showing up and supporting this. You know, lived experience, you know, there needs more room for it, and I'm hoping to just go out and educate people. And these topics do take time. It took me a while. It took me more than a while. So just be patient with yourself and know that we're always here for you if you need anything. So thank you so much for your time tonight.
Thank you.
Thank you.
Thank you. This is wonderful. I look forward to having more conversations with you.
Thank you so much. Have a great night.